number there. Yeah, well, I'm certainly, I think that's adding to some of the optimism about, basically get the economy back on track. And I feel like, I'll just say this, I feel like the mentality is like, hey, if we can get the economy back on track in fairly short order, or let's say sooner than expected, and then we get, the COVID situation to be subdued, so we're not getting another flare up. Then we got this Fed pump that came in, over the past 2 months. Um, they're almost, and it feels like the mentality is like, hey, maybe we just got an added stimulus boost in a situation that, maybe didn't seem as bad as feared a couple months ago. So it seems a little bit of that is going on. Kevin, like you had mentioned though, we do have to see where it goes from here. We don't know what's going to happen. We could get a reversal. We could get some flare up. I'm just impressed with the market's ability to continue to melt up in the face of what some might construe as some heightened uncertainty, et cetera, be it trade or, be it, some of the protests happening, which could equate to some more flare-ups there. Yeah, um, the market's speaking though. It's just saying, hey, you're going to have to do better than what you've been throwing at us if you want us to convince us that we have something to worry about because the Fed has our back. That feels like what the mentality is.
So Nate, I actually wanted to pose a quick question to you, and then we could probably, jump into it. Obviously the protests are, and we're not going to comment on like the politics of it, right? We already
Hmm.
know. But could the consumer and could the market be pricing in? I just want to get your thoughts. Could the market be pricing in that the consumer is now, let's say, distracted with another um, issue going on in the United States, and maybe the consumer is not going to be as concerned with COVID moving forward? There could be a possibility that the consumer themselves, we don't look back and we say, you know what, this is the new situation. I'm not really concerned about COVID anymore. Let's go back to the way things were pre-COVID. I mean, I'm just posing that thought out there. Do you think that that might be a little bit of what the market might be pricing in, or do you think that there is still a genuine concern regarding COVID at this point?
Yeah, I think you could be onto something. So I think you're right with the protests going on. That could add to that, and I think to your point there, Kevin, I feel like, and just this is from my personal experience or with my circle of family and friends, I think people were getting pretty fed up with being locked down, and the more that you're in that lockdown, then I feel like when you weigh the cost of saying, hey, all right, we're been, to put it this way, the fear was a lot higher back in March and then early April. And then the more you're kind of self-contained and you're saying, I can't do this, I can't go out, I can't do these things, eventually it starts to get a shift to where that consumer behavior, that mentality is like, all right, I just want to get out there. And look, I understand what's going on with COVID. I can just be really careful. I can take these precautions. So it's not like they're going to go out there and throw caution into the wind per se. But I think you're right. I think there's kind of a little bit of that pent up um, enthusiasm about getting back to an economy where you can move around and you can go do the things that you used to do prior to this COVID situation. So yeah, I think you're right in that sense. And Kevin, the psychology or the confidence, consumer confidence, is so important in bringing the economy, back into motion. And so certainly, it's not, it's 70% of GDP. It's extremely important to have the consumer on board, and it feels like, you hear about some of those reopenings or even some of the cruises, I think, for next year, that
Mhm.
bookings were really strong, and they opened up, some of these theme parks, whether in China, and Disney did that, and there was this, demand that outstripped supply, and so there has been evidence that the consumer is willing to get back out there with the reopening of some of these establishments. So yeah, I think you're onto something.
It's interesting.
Yeah, it certainly is. Yeah, and things could change, guys. I mean, everybody knows this is 2020. This has been a very bizarre year, very volatile year. I mean, and so it's not like, hey, you can sit back, put your hands behind your heads, and kick up your heels and say, everything's going to be fine. You still have to be respectful for the volatile nature of kind of the environment that we're in these days. So I certainly am. Okay, so S&P, yeah, looks like we're still in multi-mode, hugging the top of this Bollinger Band. Um, Gosh, don't fight the trend. And it looks like what's happening today also is what the S&P is and the Dow is getting some boost from is companies like I'll just point this out, Kevin. You let me know what you think. Boeing, from a technical standpoint, looks like it's not as high as it was from this initial bounce it had back in late March, but it looks like it is definitely moving above the levels it's been since then. You get news like Dan Loeb taking a stake in Boeing. That's certainly helping out. I think it helped bolsters that case in terms of the rotation into some of these beaten up plays that haven't rebounded much. Another example, Norwegian Cruise Lines and Carnival both got downgraded today. The stocks open lower. Now they're higher. That kind of relative strength is telling. They're pushing up towards where these highs were, where they kind of this would be the highest close, for example, on Norwegian since early March if it were to close right here today. I think that's noteworthy. And financials, here's kind of what resistance would have been where it seemed to top out. Ning, I see you talking about AXP, and here was where it looked like we wanted to break out, and then we came back down. This is more confirmation of a breakout to the upside. So yesterday, I wasn't meaning to suggest, you're saying here that you took off some contracts. I didn't know if you were in AXP. And Kevin, I'll just fill you in. Yesterday, Ning was asking about AXP, what would you do? I said, look, I would rather be in the stock if it pulled back to, let's say it's 50-day or around the 90-ish level, around this area, on a pullback to the mid of the Bollinger Bands. Or I'd feel more comfortable if it were to actually break out above the previous resistance around, at the time, 101.75. Well, it certainly gapped up above there. Financials are doing really well today. Kevin, what are your thoughts on financials?
Financials are showing a little bit of strength now. Nate, when you actually look at financials, especially when we saw the initial sell-off, we actually saw a couple of, bigger names that are out there that they were actually trading at a discount compared to their book value. Now, obviously, their book value, there was a little bit of concern with the book value figures because obviously there's certain credit ratings that were out there. They were account receivables could have been pseudo inflated or what have you, but there was a lot of bargains compared to some of the other industries that we have been looking at and that have been really rallying. If you're looking at technology or healthcare, financials, I would say probably were trading at a little bit more of a discount, and rightfully so. You are seeing a bid on the upside, and then you're also seeing a move in the treasury yields as well. We are seeing, even just today, the 10-year treasury hit 0.7 points today. So you're seeing that movement coming out of the treasuries. You're seeing people selling the treasuries, which is why the rates are going up. They're selling the treasuries, they're moving over in the equities, and we are seeing this overall rotation happening within the marketplace. And if you see those interest rates continuing to rise, even though that the Fed wants to have obviously low interest rates, but you see those interest rates rising due to market factors, you'll also see financials having a little bit more of a favorability on the upside just because of the margin interest that they make, which comprises the majority of their income when it comes to the banking sector specifically. So not a surprise if they're moving up on the upside. And you have TLT up right now. You have now you have the 10-year up right now, but yeah, you're seeing the 10-year kind of actually hit, and it actually surpassed the previous resistance levels. So Nate, when you're looking at these previous resistance levels, it's always that 1, 2, 3, right? If you hit it, the resistance once, you test it again, and you test it again, and then you break out the next time, that typically is a bullish indicator, is it not?
Oh yeah, yeah, no, and I think really that's really what the market wants to see. That's what the Fed wants to see as well too. The Fed wants to be more in the inflationary side of the equation than the deflationary side. This is good for the financial sector specifically, as you pointed out there, Kevin, with that yield curve steepening. So that's certainly helping out. It looks good right now. We'll have to wait to see what happens tomorrow, but I think the market would like it to see this continue to get a higher close up here to make sure we've cleared some of this around here. So let's see, what was the high here was 7.84. So right around, it just seems this area that it's really testing or pushing up against. We'll have to see what happens tomorrow. but I think the market would applaud that. That would just kind of speak to a little bit more of this thesis that the reopening and the recovery is underway, and yields are signifying that. Ning, you're asking about GLD as well. Why is GLD down? I think it definitely has to do with the yields and with TLT. It's just an inverse. So this is an ETF, guys, a proxy for bonds, if you want to call it that. This chart looks a little bit bearish to me. We'll have to keep an eye on it, just because, it's, technical analysis 101, you make a new, multi-month low here, then, you just got to keep an eye on that, whether it's, multi-week, multi-month, 52-week, multi-year, those kind of lows, you just want to monitor those and see if that's anything significant. On the other hand, you could say, well, TLT is down, near its the bottom end of its Bollinger Band, actually a little bit above it. We could see a bounce back, so we'll have to monitor TLT as well. But Ning, I think that is what is hurting GLD. Interest rates going up, then the store of value on GLD then not as attractive, and so couple that with the rally in the equities that you're seeing there, and some of those value stocks that are coming back, or some of those sectors that have been beaten down, finding some of that money flow, then I think you're seeing some kind of coming out of GLD. On the other hand, GLD, I would say here, and GLD, again, just a proxy for gold, you could say it's getting near kind of the lower end of this range. So I would say 165 to 158 is your range there. Let's see if it holds. Let's see if it's in a trading range. Let's see what happened with interest rates tomorrow. Yeah, that's what I think is affecting gold prices today. Same with SLV or silver. Silver technically looks better. Looks like this could still be a pullback. Now, I'm just saying near term, technically, silver looks better. We know that the gold to silver ratio is definitely in favor of gold. We know that silver is underperformed. We know that silver hasn't been making new highs with gold. But recently, this breakout in silver, which perhaps speak to some of that hope or optimism around the recovery and the industrial application, we'll keep an eye on silver as well. So too early to say. But Kevin, I like the way you bring up those interest rates. Financials, we'll see if it still has legs tomorrow. But right now, that candle suggesting that it's holding up fairly well. And I think you got to take note that when you see this kind of move, you see the cruise lines that are downgraded and they move higher. You see Boeing moving up, and coupled with the stake from Dan Loeb's just kind of adds a little bit extra oomph to that thesis, or that narrative that hey, we can get, start moving some money into some of these cyclicals because of the potential for the recovery looks to be getting better. Okay, so let's see. Stan asking about the VIX. Can you explain the movement in the VIX today? It is down, even though the market moved quite a bit today. Okay, Kevin, do you want to chime in on the VIX? Your thoughts on the VIX?
Sure. So a couple of thoughts here on the VIX. So when you're looking at the VIX is actually being priced in with basically out of the money S&P 500 or SPX options. So when you see risk, or when institutions see risk on the table, they typically will start buying up SPX options, out of the money options, typically as a hedge. So if there's increased risk or heightened risk within the marketplace, you'll see these institutions buy those out of the money puts, or sell calls, out of the money calls on the SPX, which is what really causes the VIX in itself to go up. When institutions generally see risk coming down in the marketplace, they won't put as many trades on those out of the money products, because they don't feel like they need to hedge as much in the marketplace, because they don't feel like there's a lot of risk that's out there. So Stan, I would say typically, and I would say this is probably 70% of the time, because Nate, you and I have seen the first 6 months of this year, the VIX and the equity market it's been very, very crazy. But I would say 70% of the time, typically when you see the marketplace go up, you'll actually see the VIX go down, because as the market goes up, the market gets complacent. They get complacent, they would tend to not actually put on additional hedges to the downside. They don't feel like there's as much downside risk. So today, the movement in the VIX is definitely justified. But Stan, there are some caveats. We did see this on Monday, and on Monday we actually saw the market go up and the VIX actually went up. And we saw that on Friday as well. You'll typically see that potentially happen on Fridays, especially in market events that we are going through right now, is because of the over the night or over weekend type of risk, right? So sometimes you'll get these hedge managers and these portfolio managers that may put on some SPX positions just to cover themselves over the weekend, whether it's another news item that comes out regarding COVID, if it's a China trade talk, wars, or anything like that, their overall job is to make sure that they're hedged and protected. So sometimes you'll actually see where we have actually moves on the upside. You'll also see the VIX move on the upside as well. And that's just because you might have a news event that comes out. We saw this happen yesterday. The VIX was up. The market was up as well. Guess what our news event was today? It was the non-farm payroll numbers, right? So you're seeing a little bit of a hedge being put on. But I would say about 70% of the time, the VIX and the overall market itself is going to be traditionally inverse. And maybe you can add any color to that or any other perspective that you might have.
Yeah, no, you're exactly right. So Stan, I understand what you're saying. You have a good point. You're like, hey, markets are moving, look, S&P 1.3% here. That's a pretty big move or outsized move. Why is the VIX moving down when volatility is non-directional? But to Kevin's point, yes, I think it's around 80% of the time, maybe a little bit more, that you're going to see the VIX move inverse to the S&P 500, as Kevin is alluding to, basically. So it's no surprise here. S&P is at the highest level since early March. Just flip that around. VIX is at the lowest levels since early March. So it's almost the exact inverse of that. It doesn't always happen, but it's definitely much greater than 50%. I think it's around 80% or so. So that's just what's going on. And keep in mind, a VIX at 25 is still elevated, and I think it's suggesting roughly around 40 points per day on the S&P, and right now we're at 42. So nothing too unusual, Stan, that I'm seeing there in my mind. Keep in mind, when the market's going up like this, what Kevin is saying is that this kind of indicates that the uncertainty or the fear is dissipating, and because it's reflecting potentially the economics or the improving economics, and then therefore the demand for protection goes down. The demand for protection goes down, then the VIX goes down, et cetera, et cetera. So that's how it kind of ties in to that. But good call out. We'll keep an eye on the VIX. 25, 26 here, still pretty elevated. So we shall continue to monitor that. Let's see here. Okay, I think we've got to most of the questions here. Let's go ahead and Kevin, just real quick, anything you want to say on oil? It was higher earlier, but
we saw a little bit of a rise in oil today. So we did have the EIA numbers come out for oil. We did see actually a 2.1 million barrel drawdown compared to the market expectation of 3.1 or 3.0 million barrels as a buildup. So we did see a little bit of a drawdown in oil, and we're seeing actually oil had a decent day today, but you're actually seeing the oil stocks and the energy stocks actually seeing this rally a little bit more than you are in the commodity in itself. So that's a nice little bit of a rotation there. Oil will still have some volatility in there. We are seeing that there is a little bit of greater tension when it comes to China and the U.S., so that will impact oil. So as we have this uncertainty, you'll see oil continue to have some volatility, but overall we're seeing that OPEC, it sounds like they're going to continue their strategy of drawing down supply and trying to lower production at this point in time, and the overall marketplace is looking for consumer demand. So they want you and I to consume more, buy more, and drive more, and you'll overall see the price go up, right?
yeah, the mantra is more, 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 huh?
Exactly.
Yeah, no, I hear you.
Consume,
That's
consume,
that's
consume,
kind of what we
consume.
consumers do. Yeah, exactly. Okay, well, let's get into a couple earnings announcements. Zoom, yeah, and so these numbers probably blew the doors off of anybody that was expecting what they were. They basically doubled the estimates. They also raised guidance. The stock did move a lot prior to that. I think it was red earlier in the day, but then found some buying interest here. So They received a number of price target increases, but I got to say, a lot of those price target increases were anywhere from 215 to 240. Stocks at 221. It's certainly moved a lot prior to the earnings report, but still finding a bid there. Not to mention, some of these plays, Kevin, I noticed that had been, your stay-at-home plays. This is where some of the rotation's coming out of. Your Peloton, your Shopify. I don't know. Let's see. Is Amazon up or down? Yeah, it's still up, but maybe a relative weakness there. Let's see. Teladoc, that'd be another one down. So a lot of these stay-at-home plays, I think, are seeing some of that rotation out of there. This again speaks to, hey, it looks like the reopening is going okay. We're not going to say it's all clear. We're going to say it's going okay, but that we're seeing some of that rotation. I will say in regards to the NASDAQ, Kevin, did you see Microchip Technology? They basically said they provided guidance. They updated their guidance last night, and they said that they expect Q1 earnings to come in a range of $1.35 to $1.53. This was above the $1.34 estimate, and revenue to be $1.247 to $1.325 billion, the midpoint above that $1.25 billion range. They said the customers' factories in China are fully back to work, and the supply chain related disruptions, which were in Malaysia and Philippines, look to have eased. So you get Microchip doing this, man, right at the high of the day. That's generally, markets are at the high of the day, so maybe not too unusual. But then you get your semis that's getting definitely applauding that. What's your take on the semis here?
Very interesting space here. We continue to see them rise, and we continue to also hear from these companies that are in the sector continuing to say that there's still consumer demand out there. I was actually a little bit shocked, and we'll actually see if we continue to see some of this demand in the semis and some of these technology companies as we kind of get out of the COVID. So we'll see if the actual COVID trade continues. But overall, they're gaining a lot of market share, and we're seeing this just new highs coming up, it seems like every day. Now you have it already listed up there. It looks like we're about to approach a resistance level at about 153.1. So it's going to be interesting to see if we are able to break that or even just maintain that. But the velocity that we're seeing from the semis is shocking in my opinion. There's nothing else I can really say about it.
Yeah, I don't know if it's 5G. I don't, I know perhaps, even the COVID-19 situation and the stay at home and the demand for computers and the transition to cloud, the speed up and all of that, and, is perhaps creating more demand for the semis. Micron also recently, they updated their guidance as well, better than expected. I believe that was last week. Probably this day right here, this green candle. That was probably it. So yeah, it's yeah.
I think it's also going to be the it's not even just the consumer itself, just as the end user, but it's also going to be some of these businesses as well. Some of these companies that went through COVID, that was a very big shock to them, and we had to transition. And we're doing this ourselves, right? We're working from home, we're working remotely, things of that nature. You could see that some of these companies, and they've already said and announced that they're going to double down on some of the technology to make sure the infrastructure is in place to be able to work remotely fairly easily. So maybe it's going to be also some of the spending from some of these large cap companies as well. I mean, even Jack Dorsey from Twitter basically said that like 90% or 95% of their employees can basically work from remotely indefinitely, right? Like that takes a lot for you to be able to run some of these businesses on infrastructure like that. So maybe we continue to see spending coming from some of these larger corporations.
Yeah, no, absolutely. Yeah, it's if you were kind of on the fence about, hey, should I transition to cloud or not? This probably gave you the nudge recently over the past couple months here. So, okay, FB asking about Broadcom. Broadcom earnings tomorrow after the bell. FB saying that let's see, you have a. Let me see, Epi, what is your spread? Do you have a spread going on here? Looks like you have some calls that are expiring this week. I'm not sure of the strike prices, but perhaps you're thinking of rolling up Got earnings that are coming out tomorrow after the bell. I don't know, Kevin, you want to take a stab at this? Let's assume that you were in some Broadcom calls. Stocks up 4% today, obviously benefiting from the overall semi sector and the microchip guidance. Have earnings tomorrow after the bell. Your calls expire at the end of the week. Um, do you make any adjustments, or would you have any thoughts on that?
Nate, I would say that at this point in time, I probably would continue to hold my position. And it's not a recommendation. This is just my own opinion. And the reason being is we are able to sell your calls in the open market and you're able to get into some new calls, which is great to have. But today you have Broadcom in itself up 4%. You have the overall market up at this point in time. You're going to have fairly high IV going into earnings. I'm not sure if it's worth paying the additional IV for earnings to roll out for another week, where if you're in a profitable position right now, especially with a 4% move on the day before earnings, uh, I just think it might be a little bit of an expensive trade. Now, it still could be a profitable trade. I don't want to say exactly profitable, but it could be a little bit expensive just because you're trying to open a new position prior to earnings, whereas a lot of that implied volatility is going to be sucked out of those options post earnings and might be a little bit of a surprise to you. So that's just myself. I'd rather just take my profits, maybe go into earnings, take my profits, reassess the overall marketplace and place a new trade than trying to roll pre-earnings. Unless you have a spread on, I wouldn't see why
Yeah,
not.
I think he does. So yeah, FB's saying that basically he's got a 307.50, 320 spread here. Wondering if he should make any adjustments, close them out before earnings. The stock's making a nice move. Like, I guess it depends on what it does tomorrow. It depends on what did you pay for the spread? What's your outlook for afterwards from that? How does Broadcom normally respond to earnings? Certainly, some of the upbeat guidance from Micron and Microchip that probably speaks pretty well for any semiconductor company. So those are some things to take in consideration. But I'll say this, FB, that you paid 450. So if I go into a spread, if I paid 450, and let's see, your max gain is 1250. If I can get out of there for 850 or 9 and not have to go through earnings, I'm probably out of there. So.
Yeah.
So I'm not, so if Broadcom's up another $8-9 tomorrow, you get maybe some IV boost on your short strike. Maybe you can get out of there for 850 or 9. Gosh, for me, I'm probably out of there because I'd rather not risk going into earnings, even though it looks for the semiconductor sector in general, it looks pretty favorable given the chart and given the recent guidance that we've seen there. So that's all we can say about that. We can't tell you what to do, but we'll keep an eye on Broadcom tomorrow for earnings there. Malcolm, you're asking, you lost your volume chart. All you got to do is just open your chart drawer here and then go to View All Studies. View All Studies, and then you can go and just add volume here. And when you add it, you can just either have it in a new pane or in the price chart or within another study window if you'd like as well. But that's simply how you would do that. Hopefully, if you have any issues, just let me know there. But okay, where is? We're having some latency kind of issues there. Okay, let's get into some of the activity, guys. Thanks for the questions. Let's go to, I'll just say Cognizant Technology Solutions. Some bullish activity that we saw here on the 5450 call. It expires this week, so this is short term. We'll call it speculation. New positioning, 8,700 contracts or so. And you can see here, let's change our theta to open interest to confirm. Got new positioning. And let's see, Kevin, they were paying, let's see, anywhere from $1.05 to $1.30. So not really getting a lot of movement out of the options here. $1.20 by $1.35. I don't know. What do you think of this this positioning here? 54.50 call. Anything stick out for you there?
It's an interesting trade, on the upside. I mean, the company itself looks like it's in financial services, healthcare, manufacturing, logistics. So obviously those are really kind of the sectors that we've been talking about today that have been, having that little bit of that rotation. So obviously a bullish strategy in itself. And from a price chart standpoint, I mean, it's testing its resistance at about 55.30 at this point. We could check another day or so, but if it breaks out through that point, it could have some upside potential. So it's an interesting trade.
Yeah.
Uh, Pretty widespread there, but interesting trade, nonetheless.
Yeah, I'm not opposed to per se for doing a long call strategy that expires on Friday. If I do something like that, I'm very stingy in terms of my timing of it and
Hmm.
how much of if it's not working out that I'll take. And like if I were to buy some contracts for let's just say $1 or something, and it's already trading 120, 130 or something, I might be out of that trade just as quickly as I got in. So you just got to be really careful with these short-term trades. These contracts are in the money. So these are 54.50 calls. You got 80 cents of intrinsic value, but you do have about, at $1.30, you've got 50 cents of time value. So you need this guy to move here in the next 48 hours if you are in these types of short-term trades. So be mindful of that, please.
Now, Nate,
Let's
real quick question, just to see,
sure.
are we able to see what the $60 strikes are going for, just in case, we could see what the $60 strikes are to see if it would have been, yeah. So this just not a lot of maybe not a lot of market makers are trading this one. So you could spread it off too, right? We always talk about spreading off a particular position, lower some of that
Yeah.
cost that's out there. Just depends on where you see the stock moving up to. Just maybe if the $60 strike price, because they look like to be the resistance point for the stock in general, seeing if there maybe could gain some premium and try to reduce the overall cost.
Yeah. So they were $1.30. Yeah, it's a good point. Just for discussion, $1.30 that they paid. Maybe you put a bid out here and say, "Hey, I'll sell some of these at 80 cents, so that then my net debit will be 50 cents, and then I can just kind of feel more comfortable letting it ride into Friday." If you expect the general trend to be upwards, yeah, it's always a possibility. Yeah, good to bring that up, Kevin. Let's take a look here. Also, Weisenhauser, excuse me, Weyerhaeuser, that they had calls are outnumbering puts 30 to 1. Chart probably looked a little bit better as it was peaking above this prior resistance. But the unusual activity here is on the June 19th, 24 call. You can see it here. So you can see up here on the volume ratio, this is why it came up on the radar. They are a REIT, and mostly these were buys for 35 cents. I believe these were earlier in the day when the stock was a little bit higher. You can see around that 20. It's not a big mover, but that looks to be a little bit more time here, 17 days on that positioning there. Let's go to Dow for the unusual put activity. So this one's kind of unusual, Kevin. So Dow, what do you think technically, first of all?
Technically from Dow, I mean, it's actually making a little bit of a breakout. It's moving above its 100-day right now. So it's above the 100-day, the 50-day, and the 20. Still isn't above the 200-day, but it's been making a pretty decent move here. Dow is going to be very interesting because it does have a lot of international exposure, as you know, and we've been talking about some of these industrial companies. These industrials have been definitely making a move on the upside. They've been beaten down. They were beaten down even before pre-COVID, but you're seeing some upside movement. But this has a lot of exposure when it comes to China trade talks and things of that nature. There was already talks about China potentially not purchasing our agriculture products when it comes to livestock again.
Mhm.
That's going to impact Dow because Dow Chemical in themselves, they produce a lot of the chemicals that we use for farming. So if there's less farming demand that's out there, less demand for cattle, things of that nature, could have some downside impact. But overall, the stock's been moving up fairly healthy. I mean, compared to where it was doing earlier.
Yeah,
So.
yeah. No, it's interesting you mentioned that because this is some unusual put activity that we're seeing out here on the July 17th. So Dow has earnings on July 23rd, And we saw some unusual activity on the 40 strike and the 35 strike. Looks to be a bear put spread. Multiple, 4,600, 1,000, 1,000 bought for $1.75, and simultaneously, 4,000 for the same number, simultaneously sold for 57 and 58 cents. So net, roughly $1.17 for about 8,000 contracts on a bear put spread on Dow. That's interesting that you bring that up about China, Kevin. I wonder if that's coming into play. I will say this: if Dow were to warn on its earnings coming up on July 23rd, you would suspect that this, it's what stuck out to me was that, hey, they don't want to get earnings into this play. They're going after the contracts that expire prior to the earnings announcement. Therefore, you're not going to, you don't have the higher implied volatility. But just something else to note: if you expect a company to warn, and I'm certainly not suggesting that with Dow, then I'm trying to come up with a thesis as why you'd get the contracts prior to earnings. Maybe they're looking for that, or to Kevin's point, perhaps something out of China. Maybe if you even get a China flare-up or the mention again of tariffs, maybe you'll see some of these names retreat some. Perhaps that's what they're thinking, but interesting bear put spread there. Let's go to extended stay. This, you could say, is one of those plays. Casinos, hotels, airlines, cruise ships, financials. I mean, all those stocks that really got beaten up big time over in March and April. Extended stay, throw them in that bucket. And unusual call activity here on the October 16th, $13 call. And they were paying $1.25 and $1.30 for these contracts. They're down a little bit on there. Kevin, thoughts on this trade?
It's an interesting one. I mean, obviously, it's a reopening type of trade. So you're looking at, obviously, increased consumer demand. And then for extended stay as well, it's a low-cost provider for travel. So that might be actually the first stop that consumers look at as they're trying to continue to save money. I think the savings rate now is at 33%. So this might be a conservative type of play getting back into the reopening trade in itself. So, it's interesting in itself. We'll see how it pans out, though.
Yeah, for sure. I mean, at least they gave themselves quite a bit of time for the economy to potentially recover going out to October. The stock has been up at 16, 15, 16, 17. So there is perhaps some room to get some of that to work. And at $1.25 implied volatility, just not that high, given where the stock is. Look, I understand it. You could say 59. Hey, that implied volatility sounds kind of high to me, but probably not that bad, and probably not as high for that contract there. Okay, one last one, guys, on semiconductor. Not probably surprising to see. It is pushing right up against its 200-day. But Kevin, we saw some unusual activity. They're going up to the June 19th, $19 call. Doesn't look like earnings is going to be included. What do you think of putting it on right here?
Maybe you're trying to establish a position maybe well before earnings, so the implied volatility within the marketplace is not probably reflected in those options as of yet. So getting into it, but putting on trades like that, you also have to think to yourself, obviously making an earnings play, but you also want the stock to increase pre-earnings, right? You don't want to have the stock stay where it currently is right now. You have earnings that comes in, the implied volatility spikes up, which is nice. You might be able to get a little bit of a premium for it, but if you're going to hold it through earnings, you better hope that the company can beat on the top line and bottom line as well, and have some good guidance going into the year. Because you could just have the implied volatility just get sucked out of those options. So it's an interesting trade, and maybe there's going to be others that report. Like, no, we just talked about some that already reported.
Yeah.
Maybe you get ride that wave a little bit. That might be the trade that they're going for.
Yeah, that's a good point. That you might get another big name chip that reports, such as Broadcom tomorrow. Maybe that provides a boost to the sector. It's not my favorite time to get in when you see one of these spike ups right here. I prefer to let it come back down to the trend line. I was doing a really poor job of trying to draw a trend line there, but you can see when it makes some of these spikes, it might retreat back and do a little bit. Overall, this trend looks good over the past 2 months. You could say, hey, Nate, it did clear this resistance here. Okay, perhaps that's in play. But I might wait to a little bit, it's not my favorite timing to get into something like that. But to your point, Kevin, maybe Broadcom or something like that has something to do with it. Semiconductor chart there does look great. Okay, Kevin, this flew by, buddy. Thanks so much for joining me today. Hope you are staying safe and enjoy the rest of your week.
You too, Nate. It's always fun to be on this segment with you. I hope you have a great day.
Thanks, man. You too. And guys, stick around. Up next, we got behavioral finance, how emotions impact financial decisions with, Mr. Jeffrey Abelos, regional investment strategist, and Robert Kamek. That'll be at the top of the hour. So go grab yourself a nice beverage and join us for that. Thanks.